Hi, everybody. Hello, Warriors. Let me just make sure that you guys are seeing me here. Okay. What did I just do? Okay. Hi, everybody. How's everyone doing today? I'm still getting used to Zoom. So why don't you guys tell me if you could see the screen here? It's US dollar yen.
We can see you just fine, Coach.
Everything's good? Okay. I was worried with
great.
all the Skypes and everything happening. Okay, so here we are, turnaround Tuesday. You guys agree with me that ACE is a place to become an FX ace? Okay, son, Ziggy. Okay, thank you, Eric. So I've been waiting for this line. In fact, been bearish yen for a while. And here we are. Here's a daily. So this red line's been drawn, I don't know, probably back in here. You know, I don't even know what you call it, a speed line. You know, I always experimented with speed lines and then talked about the confluence around 61.8 is down here. So the yen is trying to dig its heels in a little bit as a little bit of risk comes back to the market. Here's the S&Ps held where Steve said they could hold. I think he covered shorts there. Maybe we get a rally to 2,800 or so. And with that happening and the yen trying to bounce, we have yields popping a couple bips today. It's very possible that what we're going to have here in yields is some type of bounce. I don't know if we're going to get back inside this throwover wedge line. See, not all lines hold. I experience throwovers trading these speed lines quite a bit. So you always have to be prepared for acceleration. Like, you know, for example, if this looks like the yen does right now, but the yen could end up doing this under its red line. Anyway, looks like we're going to get some type of bounce in yields here and a bounce in yen. And maybe this is, I was reading, Jim Walsh sent me some stuff, and I think he's shorting TLT today on the opening. Anyway, that this could be a 4. So if we get a 4 there, maybe we get a 4 in US dollar yen, and then we get one more break. So yields could head up maybe to here, 218. That's another 7 bips, and then head down one more time. And something else I wanted to cover, I'm underwater on, but I'm going to stick with it through Draghi as a euro pound. And it made a new high last night when I was sleeping, got up to 89. So I'm short from 60 and 78. And, you know, now it's not as bad. I'm glad I was sleeping up here. You ever glad sometimes you're sleeping and, you know, you're resting instead of, you know, pulling your hair out, or, you know, maybe you're less emotional than me and you're just, you know, saying SHIT quietly to yourself. Anyone ever swear to themselves quietly? I know Blake's going to cut me off at any second now.
Quietly? I yell it.
Yeah, that's good. You know?
There's nothing quiet about me cursing over here.
You know what, Blake? That's good. You ventilate it. You know, people who internalize it, they get sick. So scream your ass off if you're frustrated. Get it out there like Blake. Anyway, so I still think there's a shot for euro pound. This is completely counter trend, Blake. You know, I like it. I mean, it did this, but you know, this was such an important area here. You know, all the way back when you go to dailies and weeklies, you know, where all the bears were talking, you know, sharply lower numbers. It's hard for me to believe that it won't. You know, just like Aussie Kiwi starting to come back in, that this won't do the same thing. And so just looking for a reaction. 88.30 is the off number, 88.34 today. And metals, if you caught it, great. Not great follow through so far of this falling wedge. So I liked it around Memorial Day. I don't know now. And this was not the best trade selection. The gold was a play, right? So not sure what to do about the metals. And lastly, I'll leave it with the dollar because dollar's coming off one of those speed lines that seems to be working right now down here. All right. So this came off these. I had confluence of a couple of them, of old breakout lines. So perhaps we're going to get a little dollar bounce too with the yen, and it's almost starting to seem like the S&Ps do better when the dollar is stable than when it's weaker now. Blake, you know, I've been wondering for a while if we ever got a correction in the S&Ps, would it be flight from dollar-denominated assets, or would it get a safe haven bid? And it's starting to look to me like the market likes a stable dollar, equities I'm talking about, and doesn't like a weaker dollar. Does it seem that way to you? Blake, if you're still around?
I'm sorry, we're getting comments
okay.
from the Fed governor right now,
Oh,
or one of the
okay.
Fed governors, Fed Evans, and he's talking about inflation. So putting a little bit of volatility in the dollar. So I'm sorry, I didn't even catch what you were saying.
Oh, well, I was saying that, you know, the dollar's in a level here that it could bounce, and I was curious for a long time, wondering how the dollar was going to behave if we ever got a stock market correction. And, you know, most people were looking for, you know, the dollar to be the safe haven, but it seems like equities like a stable dollar to strong better than a weak dollar. Have you noticed that?
Yeah, I think that if there's some continued volatility in equities, I think the dollar is going to actually be under a little bit of pressure, believe it or not.
Okay. I just wanted to make sure I wasn't having a flashback from the 70s.
No, it's,
okay.
That's actually kind of in line with where I'm at.
Okay, buddy. So I've kind of wrapped it up here. Curious to see what kind of lines you have in U.S. dollar yen, if there's some level here that we could get a little bounce from.
Well, you know, I'm not so much. Let me. I gotta share my screen. Let me see.
Okay. I wanted to ask the guys, do you guys have a view on the software on Zoom of what the audience is saying? Maybe one of you guys could. I forgot where that was at.
No, I mean, you know what, Dale? I've been using this less than you have. So
okay. All right.
I'm not the guy to. I'm not the guy to answer.
I'll ask Nostrvol.
Yeah, I mean, he may have a better way to see exactly, you know, what the audience is viewing.
Okay.
For me, I don't know right off the top of my head. Sorry, I'm just trying to.
So I see your charts here.
Yeah,
sorry, just trying to here.
So yeah. So let's talk a little bit about the dollar and where we're at right now. So first of all, if you're a ForexAnalytix subscriber, just if you read the analysis from last night, let me just remember, I do the end of day analysis on the euro or on all the majors throughout the course of the week. You know, if I'm here, I'm not, you know, away from my computer if I'm here, which is most of the time. And this is the analysis, if you can read. The euro dollar is at risk of making a move out of the long-term descending wedge and a move to the 200 DMA. ECB later this week will be key for the bulls. A move above 112.76 level would be a bullish breakout. Now, last night, if you didn't see the highs last night, was 112.77. So yeah, I was up 1 pip off on my assessment of the euro, but that's really the 161% extension of this move right here. You can see it right here, right? So 161% extension takes us right to those highs that we hit overnight. This resistance right here is going to be really critical. We've got to break above this to really confirm that the bullish breakout is happening in the dollar. I believe the dollar looks strong. I believe the dollar has the capability of actually breaking out to the upside. But we also not only have well, Evans is speaking right now. He's concerned about about inflation running at 2%. So that is more of a hawkish comment. But we do have Powell speaking later today. We have Powell speaking in a little less than 2 hours, about an hour and a half from now. So right now you're seeing the dollar, bounce a little bit. And you were asking about the yen. Well, the dollar yen also hit the 161% extension of this move, and which in essence is around the 50. Well, it's like in between the 50% and the 618 of that spike low back in January to the highs, and we're very divergent. So with, as you mentioned, it's turnaround Tuesday day. It's the day where we could very easily see a turnaround in equities, and we've got equities a little bit stronger here. Okay. And I think that the S&P has a good chance of bouncing back towards some of these levels. You can see them right through here, like the previous. Let me grab this dot. You can see that right through here. Can you guys see my screen?
Yes, mate, we can see
Yeah,
your screen.
buddy.
Why can't
See, yeah,
I'm looking for
an audience view to see what.
No, I'm looking for my controls. Oh, they're over here. What the hell are they doing over here? They
you can move them to another screen.
Yeah, they should have been here where I can see them. But you guys, I don't think can see these.
No, we cannot.
Yeah, it's this is where yesterday I had all my drawing tools. So let me see, annotate. Let me see, draw.
Steve moved them on you.
Yeah, I don't know whether
I'm playing a prank on you.
Yeah, okay. Gaslight.
Let me erase that. So,
am I losing my mind? I think I put my drawing tools over here yesterday.
I put them over here, and so what I was looking for is maybe something like this in the S&P. That I think is possible in the S&P going into tomorrow. And so with that being said, you look at the dollar yen, and the dollar yen looks like it can bounce. And if you also look, let's go over to like the yen pairs really quick. The euro yen had a piercing line formation. Matter of fact, it's not just the euro yen. It's the euro yen. You see the Aussie yen had a nice little piercing line formation, these are bullish setups. Kiwi yen as well. So in my opinion, the risk is that we see a bounce in these yen pairs. Now, what does that mean for the dollar? Well, the dollar, in my opinion, is going to be very, very important at this 97. Here, let me clear this out. This 97 level, that's going to be really important. And you can look at the dollar index, and we're up near our highs of the session. It's been a tight trading session thus far, but if we break below 97, that sets up a double top. By the way, if you guys were sorry, I stayed up for the RBA last night, and so I slept like 5 hours last night. I'm pretty tired right now, and if I yawn, that's the reason why. I went to set up put the chart of the day yesterday, and WordPress, which is what we use to write our blogs. It was down yesterday, so I didn't put out a chart of the day yesterday. But my chart of the day yesterday would have been this dollar index. So let me explain to you why. We have this possible double top, break below this neckline, and then you have your double top extension that takes us down to let's say roughly around 95.50. Well, the problem with that is if that actually does play out, then that double top, then you break this trend line, you break the 200-day moving average, and then it really sets up for the dollar to have more of a longer term move lower. So even if we break down to this level, we might bounce and then continue lower over time. That's how I view the dollar right now. So it's really important for the dollar index to hold above 97. We break below 97 and things are going to get a little bit more squirrely for the dollar, in my opinion. Now, what I really want to see as far as the dollar pairs go, is, the euro dollar has got to get above this 112.75 level. The cable's got to get above 127. If you read ForexAnalytix and you go over to the let me see if I can move these drawing tools here really quick. I just kind of want to move this stuff out of the way that you guys can't see. The cable, if you read the analysis from last night, the pound dollar broke a key downtrend line at the 126.60 level and looks to take on the 127 level once again. And the 127 level, this 127 level is going to be really key. We've been talking about this since last week. I mean, if you've read the analysis all through last week, 127 is going to be critical. So we want to see a move above 127. Last night's high, 126.94. So you guys can see, like, all of this resistance is really coming into play that needs to be broken, like almost universally across the board. The Aussie's struggling with the 70-cent level. A move above 70 cents, this is where things start to get squeezy, if you will, for the Aussie dollar. The RBA met last night, and they still left the door open for more cuts. So I think in order for the Aussie to really, move higher, we're going to have to see, a break above 70. So, the dollar is actually moving right now. The dollar's actually at its highs. Look at the dollar index. Here's the dollar at its highs right now as we speak. So, yeah, dollar's under a little bit of pressure here, guys. Now, I don't know if I would necessarily fall for this. Just in my opinion, we're doing this. So I am more interested in actually selling some dollars on this little dip. So just bear with me for a second, because I'm going to be buying some down here. One second here. Sorry, guys. To do a little trading when I can. Remember, we also have Powell speaking in shortly. So I'm picking up some Aussie down here. I'm picking up some Kiwi down here, and I bought a little euro down here. I sold them all this morning when the euro was up at 60 this morning, and then the Kiwi was up at the figure above the figure this morning. I sold that, so I'm just picking them up on dips. Because this is, these are the places that I really actually want to be selling dollar and picking up the rest of these. So anyway, just starting to establish some positions here on this dip, because I think what we're going to see for the Fed, or excuse me, for the ECB is not as dovish as an ECB. And if Powell is a little bit more dovish this morning, that's going to help equities higher. That's going to keep the dollar under pressure. So, like I said, I think these are the places where you need to actually start being a dollar seller in anticipation of an eventual move below 97 in the dollar index. So, and that's what I'm looking for here. So. But it's been a good move into the support, and so you guys have to know that the dollar is facing a lot of support down here. All right, so what else I wanted to go over? Oh, one of the other things, and I don't want to take too much away from what Steve is probably going to say here, but I just want to point out that precious metals, we've had a hell of a run. You can see that gold rally stalled at the 78% retracement, but man, gold looks pretty vicious here, especially if we start breaking above some of this resistance around the 1360 level, and the gold market could really start to take off. But I'll let him go into the little bit longer term charts in gold and silver. But again, I see this descending wedge in the euro. It's building. It's trying. We just need to break above this 112.75 level. Pound needs to break above 127. Aussie needs to break above 70 cents. Kiwi probably just needs to take out these highs because we've already taken out this previous low. So we're just kind of hovering around this 66-cent level, but the Kiwi actually looks pretty firm here. Dollar Canadian below 134. Once we take out 134, that's, we had this pretty bearish reversal up here with the Canadian with that move above 135. So, the dollar Canadian below 134 is going to be a pretty bearish event. The peso stalled at the 127% extension of this big move, which it may hold the peso. I'm not really dealing with the peso right at this moment, and also the Swissy. Swissy broke this big major trend line, broke below the 200-day moving average. I'm not trading the Swissy short here, but I still think it looks very vulnerable. So, the risk of a continuation lower in the Swissy seems possible, but I wouldn't be shorting it here unless equities were moving lower, and that's kind of the same attitude I have about the U.S. dollar, Japanese yen. If you remember back on the week ahead video on Sunday, what I mentioned is you got to be very specific when you're trading the dollar. So unless equities are moving lower in tandem, the dollar Swiss, the dollar yen, those are currency pairs that I'll look to sell dollars if the stock market is under pressure, but not necessarily not necessarily right now at this point in time. But this horizontal support right here on the Swissy, I really would like to see a move below 99 cents to confirm that this is indeed turning lower. These false breakouts up here, this longer term lower high, false breakout above this resistance, a couple weeks back. I think this is eventually going to weigh on the Swissy. I am, overall bearish the dollar. I just want to see the dollar actually close and break down territory below 97 in the dollar index, and a close below there really will confirm my thoughts. So right now I'm just kind of establishing smaller short dollar positions until I can see the white of their eyes, if you will. So I want to bring in my colleague Steve and Stelios. Good morning, gentlemen. How are you guys doing today?
Open the door and bring us in.
Good morning.
Come on in.
Good morning.
How are you guys doing? I'm actually really tired today. I stayed up about an hour and a half longer than I normally do for the RBA last night, and I ended up staying up for nothing. So yeah, it's weighing on me this morning. I can't stop yawning and my eyes are watering, and it's only Tuesday, which is a shame. So we've seen this pretty big reversal in the dollar. What do you guys make of this of the dollar over the last couple of days? What do you guys think?
Well, I mean, I can give my 2 cents. We talked about this on yesterday's webinar. It is a move that was primarily started from when the Fed switched their bias basically from 6 months ago, if that, where they were on autopilot, they were hiking, they were reducing the balance sheet, and then slowly Powell turned dovish. It was relatively unexpected at the time, but it turned dovish, and now we're seeing the market catch up, and now we're actually pricing pretty much 4 cuts now. It was 3 a couple of days ago. Now it's 4 by the end of next year. So we talked about this yesterday, and could this happen? Yes, it could. They could definitely cut. Although,
by the way, Senor, yes? Related to this, Evan said a while ago, market sees something I haven't yet seen.
Yeah.
What, inflation?
Yeah,
is that what you're referencing?
No, That was
the market pricing in the cuts, basically. He says
exactly.
he says he doesn't see why.
Got it.
But inflation, the Fed's preferred index core PCE is at 1.6%, and it's stuck, and it's below 2%. So with the major economic indicators apart from employment, all turning a little bit lower now. Housing PMIs, all the leading indicators, they're turning lower. How can you
employment is anyhow a lagging indicator. It's the last one that will always turn.
Yes. So how can you not be dovish if you're seeing this effect, and also you're seeing the global economy kind of not nosediving but turning as well? I think cuts could well be coming, but if things get really bad, I don't think it's going to be 3 or 4. We said this yesterday. I think they could very easily go back to 0. And QE, I know it sounds crazy. It probably sounds just as crazy as Steve was saying only a few months ago that the recession is coming, and now pretty much everybody's saying it. So,
yeah, I mean, and they're, the guys from my office are, referencing that there's some pretty big bets against the dollar coming through, the last 24 hours or so. And I think, people are preparing for the Fed to become a little bit more dovish moving forward. So it's, I think the breaking point for the dollar index is at 97. And I think that's where we, need to be looking at. I'm going to, Steve, if you can grab the screen, I just want to say, those of you that took advantage of the ForexAnalytix offer, I'm glad you did, because as I mentioned to you guys yesterday morning, the special is now gone, but don't worry, you can still try us out for $1 for 10 days. But when you do that, make sure you download the mobile app. And then, for those of you that are accustomed to listening in here, make sure you talk to Forest Park FX. They are our webinar sponsors. If you want to be involved in the reimbursement program where you can possibly get ForexAnalytix for free based on the trading volumes that you do, make sure you reach out to them. There's their Skype and their email address to contact them is right here. And then if you're in the US, you can actually get cashback rebates. So, that's also an option. Make sure you reach out to Forest Park FX. They are really, really wonderful partners to work with. They are in line with just making sure that you succeed, because they don't succeed unless you succeed. So they're just trying to help you find the best broker based on your trading style, your trading strategies. So, so there you go. Steve, I'll pass it over to you. Well,
don't worry, I already have it. I mean,
oh, you do?
2 seconds. There we go.
Okay.
Now I do.
All right. You guys have a great one, and thanks everybody for tuning in and supporting us.
Thank you, Blake.
Thank you, Blake.
Thanks, guys.
Speaking of the Fed and cutting, Steve, who's going to be a very happy person if they start cutting? The president, right?
Yeah, of course. I mean,
he's been quite vocal.
Yeah, he's been asking for it for a long time.
They're not cutting till the S&P's 2,200.
Am
I extremely accurate and humble opinion?
I think they're going to be. I think they're going to be cutting along, long in advance before we get 2,200.
Do you? Okay. Why?
At 2,200, they're going to be doing QE5 because they will have already finished QE4.
Okay. What do you think the catalyst will be for them to flip from on hold to QE?
First of all, they don't really need a catalyst. I want to remind you that they flipped between October and December from we are on a preset path with tightening and reducing the size of the balance sheet.
You don't have to remind me about that. I remember it. But why did they flip? Why did they go to hold? What was happening?
In my opinion, 2 reasons. One, because, oppositely from what they will ever admit, of course, they do have, data that indicate that things are not great.
You don't think the stock market hit, which was the worst December since 1933, had anything to do with it?
Of course it did. Of course it did. There's no question about it. We know that they are S&P sensitive, and one of the reasons they are, asset prices sensitive is because the only thing that keeps, the party going is asset valuations, nothing else. I mean, there is no real legs that the economy is standing on at the moment. If that's gone, then we're going to go straight into a recession. I think we would already be in a recession if Trump hadn't been elected. But he brought in a lot of optimism. He threw in a decent amount of fiscal stimulus through tax cuts, and that is what prolonged the inevitable somewhat.
Yeah, it created a lot of buybacks. I think the corporations use most of that money for financial engineering. I haven't seen any new plants going up here.
That is indeed the case.
What a scam. I was thinking about this confidence, with this gold run and everything, Steve. And you know what a confidence crisis is? When people discover the con in it.
That's a good one.
What do you think, Stel?
That is a good one.
People get tired of being conned and they, buy gold. Okay, so I'm going to shut up now. How about that?
Gold, by the way, if you haven't seen for people that haven't seen my interview, when was it actually? What month was it, Joe?
Real Vision?
Yeah, on gold. Okay. I actually, we were trading high in gold. I was looking for a March. Yeah, it was in March, actually. Yes, correct. So, I was looking for a move lower, which we did get. But I said back then that, that's just like short, medium term outlook, looking for lower prices because, ultimately I'm very bullish the metals. And, that's the case. And keep in mind that.
Well, last week when we were right there, you said it looks like we're coming out of here. And you've been more right about the gold silver ratio continuing to make new highs here. So a really good call last week, showing that formation you have on the screen now. You showed it threatening a breakout up there.
Yeah, thank you. It was more or less a textbook, corrective formation.
Yeah.
That is why I actually took profits on the remaining short position. Unfortunately, I got unlucky because I even switched long and I put it in a pattern in play, which didn't work because I was initially, but corrections are a little bit tricky because initially I was looking at this as resistance, this trend line that I shifted now. So we had that false break higher. That's when I said, okay, we're breaking higher. That's it. We're moving to the upside. Unfortunately, that proved to be a wrong one. So I had to adjust the trend line resistance. But once we broke above it once again, and especially we took out the previous high here at 1300, that was, a confirmed break in that occasion. I think that opens the door for a move towards 1360. And if for any reason we take out 1360,
1400.
You can see how important that is, right?
Yeah.
If we take out 1360, I'm pretty certain we're going to see some, big extension higher. I don't know how big it's going to be, but I wouldn't be expecting to see anything less than 1400, as you mentioned. And that 1400 might come very, very fast, actually, following that.
Yeah. Okay. Thank you, Steve. And you know what Blake says? I think it's Blake's expression. When Ziggy repeats it on his promos, it's okay to be wrong. It's just not okay to stay wrong.
Oh, absolutely.
Right? Okay, buddy.
There's no question about it.
So, no one's a messiah in the market. Okay.
Exactly.
All right, bro.
By the way, we're going to be releasing later today a blog post about the dollar because it's currently on a key level. Blake showed that we're testing the previous lows, but I also have this trend line on my chart, which he didn't have. So I wanted to pinpoint this as well. You can see that it's not only that we're testing the previous low, which is important because, printing a lower low is an event to consider. But also keep in mind this ascending trend line has been holding this uptrend since February of 2018. So it's a 15-month ascending trend line, and we're testing this at the same time, and of course not coincidentally, Euro USD is also threatening this trend line, this descending trend line. So at the same time also, obviously not coincidentally, all those are highly correlated, USD Swiss is toying around with this trend line. Actually, it has penetrated through it. depends on how you want to draw it. If you redraw it a little bit, you know how it is. You can make it pass through there. There's no actual perfection there, but you see what I'm getting from, and here it is. So USD Swiss also threatening with a big breakdown. So what happens from here with the dollar is absolutely critical, because I think that a lot of eyes are set on this, from the market participants, and it is what it is, which means if it breaks down, I think we're going to see more dollar weakness. We're going to see accelerated dollar weakness, actually, with whatever that brings. Cable at the same time, by the way, despite being one of the weakest. So let me make it very, very clear. If I were to be selling dollars, I wouldn't be doing it, with cable being in mind. Of course, nobody can exclude the possibility of some very positive news coming from the Brexit side, and from being a lagger, the cable might prove to be a leader. But that's all a big hypothesis. Until that happens, the cable is still underperforming. The pound is still underperforming other currencies against the dollar. So I do think that the euro is a better place to be. And lately the Kiwi and even the Aussie have been better. I mean, look at the Aussie. The Aussie is pushing higher. If you remember, we drew that many days ago. Maybe it was a week before the previous one. That we might see an extension higher, targeting this triple confluence of resistance, quadruple confluence of resistance, actually at 70.3 cents. So I think we're on our way there. Kiwi, also a nice breakout from this descending wedge. We came back, we retested it, we're accelerating higher once again. Does this make me really bullish the Kiwi? No, it doesn't, because we can easily extend towards 67.10 cents and get rejected from there, because that's a previous support resistance area. The 200 daily moving average is also there. So I wouldn't be that enthusiastic about it, but it can certainly extend higher from here. And who knows, if the dollar starts really breaking down, then everything should find a bid against the dollar. By the way, if you remember yesterday, I wrote in the chat room, I actually bought 27.42 in the S&P. We are approaching my first target here at 27.70. I've now moved my stop loss to break even. So, there's nothing for me to lose here anymore. Let's see if we can get some acceleration higher. Blake showed that we can retest 2800, and that's indeed the case. That's my second target, because my first target is this area, 2770, 2770 something, because we have the 200 daily moving average and this little consolidation happening there. Now, if we penetrate through that, keep in mind that we're also working on posting a morning star formation today. So if we close anywhere between that area that I showed and anywhere above it, we're also posting a morning star formation on the daily chart, which might point to an extension higher. Now, I've covered several markets yesterday here, and I know that most of you were here, but Gregor wasn't.
Steve, can I interrupt? I
Absolutely.
think your screen is stuck again. We're seeing the Aussie dollar.
Okay, doesn't really matter, Stelio, okay. Because I'm going to pass it to Gregor anyhow. I was about to say that Gregor is with us today, so let me find him and promote him. Give me a second. Good. Because we haven't heard Gregor in some time. Reclaim host, there I am, and now let me find Gregor. Gregor, I don't see you. Can you give me a link or something? Stelio, can you give a link to Gregor so he can register to come in as a
yes,
as an attendee for now? And I'm gonna make him a panelist tomorrow. Give him a link.
Sure. 1 second, I'm doing it now, and
I'm gonna promote him.
There we go. So hopefully he's gonna join in pretty quickly.
Yeah. Okay. Let me share my screen again so I can actually. There we go. Stop sharing. And now I'm going to share again to get this unstuck. There we go. So I'm going to show a couple more things until Greg is here. Let me know, Stelio, when he is so I can actually promote him, okay? So.
By the way, your screen is still showing the Aussie.
What about now? Because I stopped sharing and I started sharing again.
It's still, for me, it's still showing the same.
Really?
That's really weird.
Huh. That is interesting. Let me search something else and see. Okay, what about now?
Same. This is weird.
It is actually, and I have no clue. I mean, there's no way you can troubleshoot it. Anyhow,
Joe says
I'm here.
There you go. I can see it now. You're on the main page. Okay, I can see it.
Okay, perfect. Okay, so now I can share again the previous page. There it is. Okay, what about now? Can you see charts?
Yes, sir.
Okay, perfect. So let's wait for Gregor. Let me know when he's here so I can promote him. We showed what's happening with the Kiwi, the Aussie, the S&P. By the way, obviously, if we have a look at the rest of the indices, doesn't change much. Here is the S&P, by the way. We had this equality target. This is what I was talking about. The NASDAQ was clearly underperforming yesterday, but I mean, you can
googly eyes. Three drives to a top.
You can call it a coincidence.
I can see Gregor has logged in. By the way, you can
okay.
see him on the list.
You can call it a coincidence or not, but Nasdaq extended lower today while S&P was holding its ground, only to also hit the 100% retracement of this ascending wedge. So Nasdaq as well has now completed the objective that any ascending wedge has, which is retracing the full extent of it. So Nasdaq is also free to rebound from this area. Okay. Now let me find Gregor and promote him and see.
Show Google.
Gregor Horvat. Here he is. Promote to panelist. There he is.
Show Google.
More. Make co-host. There you are. Gregor. You're now co-host, mate. Unmute yourself.
Okay.
Perfect.
I'm here. And share screen, right?
Gregor, if you can take your microphone a little bit further away, you sound very loud.
It's better now?
No.
Yeah, you can bring it a little bit closer if you want. Before it was a little bit intense.
Okay, what about now?
Perfect. It's okay. Okay, cool. So now you can go ahead and share your screen.
Welcome to Zoom, wizard.
There you go.
Okay, so it's working.
Yep.
Okay, good.
So I'm wondering, I was showing that the dollar is at a key juncture against many of the majors, and also that the S&P has found the quality target and fully retraced the last leg higher, which was an ascending wedge, and the same exact thing has happened to the Nasdaq. So where to from here?
Well, I'm also observing these very important levels on both S&P 500 and the German DAX. So as you can see, as you said yourself, probably we are making a third leg of decline, very similar in length compared to the first leg. We are also here at this March 08 swing level. But as I'm looking here on the 1 hour chart, I still do not see 5 waves down finished for this wave C. So since we came just close to this level, this March lows, but still didn't spike this out, I'm thinking that there can be maybe another shift lower and then real bounce maybe occurs later this week. On DAX, what I see here and what I think it can be important, despite a very strong rise that I see right now. I was not here at in the last 2 hours, but I'm observing this gap from March 28. It hasn't been filled yet, so I was wondering, actually, this was my primary analysis, that we will see a fill gap and then reverse higher. But the key is that this is still an ABC decline, so either we'll just continue higher from here, or maybe after another drop down. In such case, that would be this whole decline would be labeled as a complex WXY. But the idea is that I see on both indexes potential corrective setbacks, and that major uptrend can still be in the cards. Also, I'm here looking at the 10-year US notes. We have seen an extended lag breakout to the upside. This could be even labeled as a triangle in a wave 4. So maybe we have seen just a strong break into wave 5, and we will see a reversal. And if stocks finds the supports, then you know that this maybe can come in play. Also, a lot of yen crosses made 61 or down to 78.6% retracement compared to this January low. So I think that even there, we are at some interesting levels where all these cycles may actually come to an end. Regarding the US dollar, as you mentioned, I'm not sure what is your bias on the US dollar.
It is, in my opinion, testing critical support area. So I'm really looking.
Yes, we are here at this important trend line.
Exactly. That's the trend line I'm looking as well.
And but what I'm observing is the RSI. You can see that there's a divergence clearly, and this price action, despite the rising prices, it's not really convincing for me. I mean, it's obvious that bulls are not that strong like they have been during May of 2018. So I'm thinking that sooner or later we will see a top of a wave 5. Okay, maybe we already saw it, but I think that this week on Friday, we will really get the real answer. Either it's a wave 5 in place, or we'll see maybe a final push to the upside and then a reversal.
As you said, we need to. I mean, we need to see something soon, and I think we will see something soon that will answer.
Yes, but what I really like at the moment, okay, is that we have seen a very strong reversal below this lower trend line support. Okay, this is the parallel trend line of the upper line. Okay, and when this happens, when
usually indicates a wave 3. Yeah.
Yes, it's normally in evidence that we are in a wave 3 and not wave C, because in wave C, you will see market actually reversing or completing the pattern at this line. So I'm thinking that maybe there is already a top in place, that we will see maybe even acceleration lower. And
my gut tells me the same thing, but I want to see a daily close below 97 to feel more confident.
Yes, and there are also other markets that I'm watching. I mean, Aussie dollar, if you take a look at this one, you can see that we reached 61.78.6 almost, and then we are now reversing higher. Maybe that's already first step into this wave C that will take us higher. Then you have New Zealand dollar, probably even better shown here. You can see that market bounced from this trend line support. So it looks like that dollar could actually be on its bearish track. And if that's the case, if dollar index is really going to see weakness, I think that there will be a lot of opportunities in commodity currencies. Also, there was a potential wedge here or ending diagonal on New Zealand dollar right into this trend line that I just show you on a weekly chart here. So in my opinion, I think that this whole wedge pattern should be fully retraced. So
yeah, that is exactly what I was showing as well, that exact descending wedge. So I agree with you. And 67.10 is a first area of resistance that is interesting, in my opinion. 200 daily moving averages there, previous support as well. Of course, as you said, if it wants to fully retrace that wedge, it will move higher than that area. But 67 is the first area I'm closely monitoring for the Kiwi.
Yeah, so when it comes to trading, I mean, if dollar is really headed lower, as I said, I think that there are opportunities in New Zealand dollar, Aussie dollar. I mean, gold is also doing very well. So if we also take a look on gold, I mean, as you know, I have been looking for these two type of corrections here for this wave B. Okay, either we are going to see higher prices for wave C to complete wave B at this 2013 swing high, or we are now completing wave B at this upper side of this triangle. Okay, but I'm really worried about this triangle because I'm looking at the silver. And what I see on silver is actually a 5-wave rise from recent swing lows. Okay, here's this 4-hour chart, probably very clear pattern. We have been in downtrend. We had plenty of overlaps, but now making an impulse out of this downward channel. So if this silver, which was much weaker than gold, is now turning to the upside, then maybe gold may not be far away to retest those higher highs from that triangle that I was showing you. So if that will prove correct, if gold will see more upside, if silver will improve, then I think that this could just send even more bulls into Aussie as well. So that's why I think that commodity currencies can be very interesting, and even against even on cross pairs. I mean, pound Aussie. Let me take a look on this one. Pound Aussie is making a break right now out of this very long wedge, which has been unfolding since end of 2018, and actually, you know, ending diagonals occurs at the end of.
By the way, Grega, just as fast comment, because you mentioned, you know, gold in relation to silver. The gold-silver ratio is at a 26-year high. Keep that in mind. 26-year high.
Okay. So, in your opinion, it means what? To this to continue or this to shift?
The gold-silver ratio has a huge ascending wedge, and we're approaching resistance at the moment. So that would definitely hold me back from buying it if that's what you're asking. But you know, we are far too experienced, both you and I, to know that usually multi-year highs bring more multi-year highs, and multi-year lows bring more multi-year lows.
Okay, I see it right now. Yes. Okay, so I mean, if gold is really will improve, and if silver, maybe if this trend will stay here, this rate here, gold will continue to be stronger. But if we consider that silver is showing strength, then we really can expect that gold will maybe break to the upside, actually. Make sense?
Yeah, absolutely.
Okay, so pound Aussie, we see wedge pattern and ending diagonal at the end of this very big corrective recovery. Okay, so there is a clear trend to me, because we have seen a very sharp drop from 2015 highs, and it's just a question of when this downtrend will resume, and maybe we are now at the early stages of this trend, because as I said, an ending diagonal could complete this WXYZ pattern. Okay, so very complex stuff, but what is very clear is this current reversal. We are falling below this slower trend line, so watch for pullbacks, and then even more weakness can be seen. Now, if
I was showing that yesterday, that is in dangers of breaking down, so I agree there as well with you. Pound Kiwi doesn't look any better as well.
Yes, I mean, pound Kiwi is maybe even clearer.
Yeah, exactly. I agree with you.
Already made the lower high here. It made 5 waves down in the previous cycle, and then very slow overlapping recovery, and now again.
Keep in mind that you can draw, besides having it as a channel, which I know why you did it. I mean, this is a double zigzag there. I understand why you drew it as an ascending channel, this whole recovery. But keep in mind that you can also draw it as a wedge, the whole thing. And if you do it like that, we even had a lovely overthrow from that wedge, which is usually a nice false break higher. Yeah, that one.
Yes, I know what you mean. Yes. So on a basic technical perspective, yes, I fully agree. But for me, the most important is the following. This reversal spike right into 2.0 level, very strong psychological level, a decisive break below this trend line support, very deep move into this previous wave B correction, which means that this is an overlap, and it's just confirmation that the previous recovery cannot be counted in 5 waves. So I think that we will see more weakness ahead, especially after a pullback. And also, if we are considering this breakout that occurred on a weekly chart in 2018, actually this was at the end of 2018, right there. And now we have this breakout right here on daily chart. So actually, we have plenty of evidences here which suggests that
it looks like a fractal, right? The daily looks like a fractal of the weekly.
Markets are fractal, yes. So, I mean, even here, ABC X ABC, here was the same thing on the daily, on this trend.
Yeah.
What about?
So the question is now, would you expect that to play out because Kiwi is just going to be doing better against?
Yes, exactly. Not because of pound weakness. Yes.
Okay, so because now we come to the $1 million question. What do you think pound is about to do from current levels?
That's why I said that I'm more trust New Zealand strength in general than pound weakness, because pound against the US dollar could maybe even just stay sideways, especially if dollar index reached the top. Okay. So on cable, it's a very tricky, but on the short term, it has 5 waves to the downside. So it looks like that we will see a correction higher and higher prices ahead. The only question is if this will be in 3 waves or in 5 waves. But on a daily here, we are at a very key level here at 78.6%. And so far, this still can be a 3-wave decline. I know that this is not a confirmation that this is actually end of a wave B. It could easily continue lower. This current trend line will turn into resistance.
So
I just have to wait a little bit more. There is a chances that this top has been already made in place here of wave 2, and we are going to see lower prices, or we will see a recovery. But I'm thinking that we may see a recovery, but because of dollar in general. But I think that New Zealand dollar could do much better against the US dollar.
Okay.
There are a lot of, as you know, a lot of concerns about the UK and Europe. So I don't.
And there is nothing we can do about that. You know, another pair that I know it's quite popular and people have been chopped around with is the USD CAD. I start to get the feeling that the USD CAD might be about to turn lower as well. We had that little false break higher from the recent range that we were trapped within. And yesterday we had a strong pullback lower. We still haven't started breaking any significant support areas, but already this type of a break higher and sharp reversal, if I look at it on shorter time frames, it looks quite impulsive to me, starts making me quite worried that, you know, we might be about to reverse lower, you know, hard. What do you think?
Yes, I absolutely agree. I think that we are in the middle of this wave 2, which may still see lower prices and maybe retest this trend line that is actually of upward channel connected from September 2012 lows. So I'm expecting drop into wave C. This in the previous decline was a very...
So what would your target be in that case, Gregor?
Price. So in my opinion, I think that we may even see a retest of these 2019 lows. On the 4-hour chart, a lot of overlaps within these trend lines and a very nice reversal from a new swing high after this wedge here or ending diagonal at the highs. So here it's even better picture on the right. You can see waves 1, 2, 3, 4, 5, right top into this trend line resistance here of this ending diagonal and a clear 5 waves of decline. So I'm ready to short this pair. I already said this to my members as well, that I will look for shorts after an ABC rise. The only concern is crude oil. Crude oil is falling, but what I think will happen is actually that crude oil will stabilize after a completion of these 5 waves down that I'm tracking at the moment. Actually, I should rework this one a little bit. Anyway, what I think it may happen is that that prices of crude oil will stabilize after a break to another low here, because I see prices in a wave 4, which can actually be a triangle. And we know the triangle occurs prior to the final stages of a larger trend. So if wave 5 is coming, prices will then stabilize, and that's when we may see.
Grega, you mean that, because I'm looking at my chart now, we are at a wave 4 of wave 3, or you think that we are at wave 4?
Wave 4 of wave 3, yes. But when it
okay, we agree then, because I see the same thing.
But the key is that I think that market will not continue to the downside with the same maneuver as it's now.
Yeah, because three of three is the strongest leg anyhow.
So from a new low, I will expect a reversal, a bounce at least in 3 waves, and that's when dollar CAD, which is already weak, may see even more weakness or even accelerate to the downside.
By the way, for an extension lower as a wave 5, keep in mind that 51.50 is the 61.8 from the lows. So I think it's a nice target.
Yes, and very important level 50, psychological level.
Yeah.
Yes, and also crude oil has a very strong relationship with stocks as well. So I'm expecting in the midterm, another push down on stocks, and then bounce, and same thing on crude oil. So I think that this could be very, very interesting if it plays out.
Okay, very nice. Anything else that is, in your?
No, not really. Actually, I covered everything what I'm tracking very closely. So
let me see if we have any questions for you. Crude, you covered. Euro pound, any targets for shorts? That's a good question, actually. Euro pound, I was tracking the latest consolidation that we had as a wave 4, and I think that we are now completing a wave 5. If you look at a rather short-term time frame, like a 4-hour chart or whatever. So I was wondering, what is your larger count here? Because a friend is asking here, Euro pound, any targets for shorts? So our friend here is looking for shorts as well.
I see Euro pound in a very big triangle.
So you look at the big picture as a triangle here, okay?
Yes, and we are now moving to the upper side of this range. So maybe there's still room for more upside.
For more upside first, yeah.
Yes, but we are in a wave C of D. So I think that sooner or later this market will slow down.
Yeah.
So, I mean, for shorts, for me, it would be too soon. Definitely, again, you would play then a strong pound. I think that there are much better currencies, as I said, than pound.
Oh, I agree with you. I definitely agree with
currencies. So maybe some other euro crosses can be more clearer regarding this bearish euro view.
Okay, and we have a question for a last one as well, which is very correlated with crude also, and is very correlated with USD CAD, and you know what I'm talking about. That is USD NOK, which has been unable after many attempts to break above the 880, 882 area.
Yes, but I still think this may happen, actually.
It might. I agree with you. It might.
Actually, this could be an ABC. Okay, this was the wrong levels. I think that we are making an ABC move higher here within a wave B. Also, this is a sideways price action.
Mm-hmm.
Black, ABC. Okay. And then I will be looking for a reversal. So again, even on dollar NOK, I'm expecting a reversal, limited upside, but we don't have such a clear price action here at the moment. So I would just stay aside on this one, just observe and wait if this actually plays out. New high, and then watch out for an impulsive decline. If that would be the case, then I would be confidently looking for a wave C. drop.
Okay. Perfect. Very nice. Okay. We also covered the questions. Coach, am I right that we had a last-minute cancellation?
Correct, Steve. And I've been scrambling going to my DH list, designated hitters. Haven't found anyone today at such
Don't
a
worry
late
about
notice.
it. It's okay. These
Well,
things
you know,
happen.
the show must go on, and you
Yeah.
know, I've asked,
We-
you know, the usual to Adam.
We had the best guest today.
You know what? You're right. You're right, and I always love asking Greg a question. So, thank you, Grega, for hanging out and sharing your great stuff today.
Thank you, mate.
Thank you. I love sharing ideas, at least if I have here in webinars, at least if I have time, you know.
Yeah.
Okay.
Appreciate it, man.
Now, since that conversation should happen off the webinar, obviously, but you know, since we're here, since we're writing this blog post about dollar being at key levels, send whatever you want. I'm going to add it to the blog.
Yes. Okay. Sure. I will look at the dollar index and.
Okay, bro. Thank you.
Okay. No problem.
All right,
Coach,
Face. That's a wrap for Turnaround Tuesday. And hope you guys are adjusting to Zoom. I think we still are, and really pretty smooth for this transition due to Steve working with everyone. It's really not that complicated anyway, if I could do it. So as always, remember, don't just count your pips, count your blessings. Good hunting today. See everyone in members chat. Hope you've become part of our family during last week's promo. And if you're new here, you could always give the $1 trial a shot. And we'll see everyone tomorrow. Let's see, who do I have scheduled for tomorrow as far as a guest? Oh, Kip Harridge, who is always a stock market bull. So come in tomorrow. I'll grill Kip. Okay, we're going to have Kip on the barbecue, see what he's thinking, and enjoy the rest of your day. Smell the roses. Okay, thank you, Steve.
bye-bye,
Thank
Coach.
you, Stell, Blake, team, best team on the net, in my extremely accurate and humble opinion. And that's a wrap, everyone. I'll see you. I'm ending the meeting right now. Adios.